And good afternoon, and welcome to another episode of the Grimaldo Group, where we are very happy to help families and people create wealth through home ownership. And in this episode today, we have Jesse James Vargas. Just the name alone makes you want to get some popcorn and sit back and relax. Jesse is actually in Miami, so he's with us over this link. He's taking the time to be with us. And today we're going to be focusing on life insurance and its products. Primarily, people know life insurance, the traditional form of life insurance, which I'm sure he'll touch base on. But there are new life insurance policies, just as if we had the old phones and now we have these beautiful brand spanking new computer phones that do more than just help you make a phone call. And Jesse, good afternoon. Thank you for being with us today. How are you?
I'm doing fantastic, Angel. Thanks for having me. Thanks to the Grimaldo Group for the opportunity to just share with the public, general public, information, education. At the end of the day, our journey is to educate families on what's going on right now in markets. How could they protect themselves against vulnerability? That is certainly a lot of that outside right now, and a lot of risks that we could avoid if we do the right steps and the right strategy. And I always said, fear is not a strategy, right? We need to be educated and get the right steps to protect our families, to protect our assets, to protect ourselves against, the forecast right now that it is not looking that pretty in a lot of sectors on the economy. And but we're gonna talk a little bit about that today.
Well, I like talking about life insurance as much as I like talking about real estate because they almost go hand in hand. A lot of times people are eager to find a place of their own. That's the American dream, after all. And we love doing the working up of helping families find their dream home. But what comes afterwards is protecting that most important asset in their life, right? Now, PHP, can you you're associated with PHP, but you're a life insurance broker with access to multiple carriers, correct? Can you talk about how the setup is, people helping people?
Correct. Well, we have our license contract on association with People Helping People, which is PHP agency. So what they provide to us as brokers is contract with 17 of the strongest and most powerful carriers in the country, right? And that allows us to, when a client has a need, 90% of the people who do our job, they do it what we call captive in the industry. Captive means that you only represent that single company, whatever's the company, right? And you can only sell their products and services. In our case, we are not limited to that. We have 17 carriers, and whenever a client has a need, whether for life insurance, whether because they want to protect their mortgage, whether because they want to have a college fund for their kids, they want to build their retirement, or they need to protect the assets that they have accumulated during their entire life, we go to all the carriers to find out which carrier has the better suitable product for that client. So that gives us a great advantage, us as agents, and then to the public, because we don't work for one single company. We work for our clients. And we are proud of that and the service that we could provide, and people satisfaction is very high.
Now, PHP is all over the United States, correct?
That is correct.
You,
It's the fastest growing FMO in the country, which is a financial marketing organization. We have about 150 offices around the country and growing by the day.
and the founder is Patrick Bet David. Interesting story. If any of you would like to know more about Patrick Bet David, he has his YouTube channel, Valuetainment, which I highly recommend. You get a lot of good information from his channel. And focusing more on life insurance, what are the different kinds of life insurance that are currently out there today?
Well, there's plenty of them. There's plenty of them. What people know more about life insurance is what they call a term policy, right? A term policy is it has a termination, it has a certain period. It starts one day and it finishes either at 10 years, 15 years, 20, 25, or 30 years, depending on the carrier. So that's the most well-known policy, and it's the most economic policy that you could get. It provides you with the highest amount of coverage for the least amount of dollars. Then you have what we call whole life policies. And in that variety category, you have more than one. You could have universal policies, right? You could have universal policies. You could have index universal policies, and you could have whole life, right? So those are policies that goes for your entire life, and depending on the goal of the client is which policy works better for them. And unfortunately, what we notice in the industry is that a lot of people use one single policy to try to solve other problems. And our experience has teaches us that that's not the case. We need to see what is the intention of the client, what they want to achieve through that contract. And then based on that, we could, work with different policies. Just to give you an example, we have a lot of our clients that are real estate investors, right? A lot of real estate investors are using what we call whole life policies to use a policy as their own bank. And I'm going to throw some information here that you could verify this. There's something that's called bank-owned life insurance contracts, right? Just between the three major banks in the United States, meaning JP Morgan Chase, Bank of America, and Wells Fargo, they own $50 billion worth of whole life insurance contracts. Why is that? Because by the FDIC, which is the regulation that guarantees them $250,000 of your deposit, money that the banks have in insurance contracts are ranked tier 1 assets, which is the most important assets. So when the FDIC is going to check the books for banks, the first thing they check is, let me see how much you have in insurance contracts. So basically, if the banks are depositing their trust in insurance companies, why won't us do the same thing, right? Especially with the market like now, where you have your money, earning no interest. So a lot of investors are using whole life policies to put their investment capital there. They could access that money. They could keep their interest that they are earning into that policy, and then they use it for investment. And that's just one of plenty of uses that insurance policies has, and not even starting with the fact that insurance retirement plans, which is called LIRP, life insurance retirement plans, 85% of Fortune 500 CEOs in this country use life insurance as a vehicle for retirement. So because they know of the tax advantages that kind of retirement has, so there's plenty of information. There's a lot of information. Unfortunately, we are in a crisis as far as how many agents are in the country, people with license to be able to educate the general public. A lot of this information is not right there being advertised because there's a lot of limitations of what an agent can do. Of course, there's several reasons, and we could discuss those reasons.
Now, for the everyday person that's just looking to protect their family and their home, traditionally, because I'm sure there's folks out there that are possibly already have a policy, but the question is, what kind of policy do you have? Is it a traditional form where you have coverage if and when something happens where someone's life, someone passes? If the policyholder passes, then that's when the family gains access to the life insurance. But then we have newer policies that will have what is called living benefits. And some of the policies only have a terminal illness rider. Can you kind of explain more on that?
Yes, certainly, more than gladly. So what happens is the majority of people, when to talk to clients, they said, "Oh, I have insurance." I say, "Yeah, but what kind of insurance do you have? How much coverage do you have? From what carrier?" And the majority of them tell me, "Oh, I have insurance, but my insurance is through my job," right? And when people have insurance through work, majority of them, they have between $25,000 to $50,000 coverage, and that's all they have to work. But now that's not even close to what they're supposed to have, right? That's not even near, because when you have a policy, number one, anyone that depends on you needs to be covered. So what that means, if I'm a father and I have a roof over my family and I have a mortgage, I need to make sure that at least that mortgage is covered. So in case I pass, my family is not going to lose the house. And you mentioned something like people get assets, right? But they don't protect them. So the reason when people earn money, they put it on a bank is because they don't want that money to be stolen from them. Then when we had a house, we could lose that house. Now, more things could happen, right? Besides having a policy through work that you only get between 25 to 50,000 on the majority, some people get more, but I'm talking about the biggest group, right? Those policies don't have living benefits. That's number one thing. The second thing is that if the person moved from job or they leave their job, they don't have a policy anymore. Now, let me tell you what living benefits are, right? This is very, very, very important, right? Living benefits is that new policies, they cover critical illness, they cover chronic illness, and some of them cover up to critical injury. What does that mean? How does that translate? That means that not only your family is going to get money if you pass, which is everybody knows that about life insurance, but if you suffer from a chronic illness and you have to stop working, right? If we pass, my family will not receive my income anymore, right? But at least I don't bring more expenses to the house. Now, if I get chronically ill, that's a big problem because my income stops. That's number one. And the expenses of the house multiply by 3 times, right? And now I'm in crisis. I'm in stress. I'm sick. I'm not getting any kind of income. And then all the assets that I work hard to bring to my family, which is the house, the cars, or whatever it is, it could be lost in one single illness. One single illness. Some people have $250,000 saved, 500,000, $1 million. We've seen clients have all their hard-earned money that they saved during their life being disappeared with one single critical illness. And the reason people have life insurance with living benefits, that's very important, right? And you need to make sure that you get chronic illness, right? And critical illness cover, because we notice certain carriers out there only cover terminal illness. That means if you suffer from a heart attack, you don't get anything, or you suffer from cancer. Now, if you have chronic illness and critical illness cover in a heart attack case, and we have, we know of a client that he has a $1.5 million policy, he only made 3 payments and he suffered a heart attack. Thank God he survived. 90% of people survive. He got a check over $200,000 because he has living benefit. That's number one. So if you don't have that, make sure you have that cover on your riders. And the statistics show, for people out there that say, I don't need life insurance, let me show you the numbers. The statistics show that 2 of every 3 adults before the age of 65 are going to suffer a chronic or a critical illness. So that means we have a 66% chance of going through one of those, right? And trust me, you don't want to be the one unprepared. You don't want to be that person.
Then it's key or very important for those that are maybe 30, 35, 40 years of age, if they don't have any life insurance, term life insurance with terminal, chronic, and critical riders or living benefits, to seriously give consideration. I mean, I like using examples that we can kind of see. So term life for a UPS driver, as an example, buys a brand new house, his first house, maybe second house, and has a family. Wife so happens to be a caretaker, the homemaker. And so he's the primary breadwinner. No life insurance whatsoever. And God forbid something happens to this individual, the UPS driver. What happens to the beautiful house that they now call home? And now he's in a coma for 12 months. He's not dead. So they don't gain access with the traditional life insurance. They don't gain access. The spouse, the family, the children don't gain access to any life insurance. But with the new and modern life insurance, as you're explaining, with terminal, chronic, and critical, this example where he's now in a coma for 12 months, they don't lose their house. their way of life continues even through this difficult moment in their life. Correct?
That is 100% correct. And one of the things that we encounter also, it's not only important to have life insurance, is the adequate coverage. Why the
Correct.
adequate coverage is important, right? And from the 200 million people in the United States that they recognize and acknowledge that they need life insurance, they also acknowledge that the people who have it, they don't have enough. Why is important to have minimum of 10 times whatever you bring to the house every year, you need to have in coverage. So if you earn $50,000, you should have at least $500,000 in coverage. Why? Because when you suffer from a chronic or critical illness, when your coverage is the appropriate one, the monthly payment that you're going to receive is going to be high enough to cover for your house expenses and all your regular expenses with you stressing out. So just imagine, as I was mentioning, how hard it is to recover from a critical or a chronic illness when you are going through the stress of not bringing income to the house. That's extremely stressful. And stress is the worst illness that we could have this day and age in this era that we're living. So one of the things that you want to do is you want to take that stress away. God forbid anyone who's listening to us, something happened, but we need to be prepared, right? That's why you have insurance in your car. You don't want to have an accident, but in case you have an accident, you want to make sure you're protected, because if someone depends on you, you better be protected.
Now, the coverage, when we talk about term life insurance, it's for a certain period. I call that period a high vulnerability period, where you have multiple responsibilities. Going back to this UPS driver example, we have this young man with young children in the household, maybe 2 or 3, and he has 30 years mortgage because he just got the keys to his house, and he's doing well with his family. He's got fairly good income as a UPS driver, but maybe he even has life insurance. But again, if it's just the traditional life insurance, it's not really coming handy when, God forbid, he suffers the massive heart attack. And you indicated 90% of people today will not die from a massive heart attack. They will be in a state of recovery for an extended period of time, that they may not be able to perform their task at work. And that puts in question what's going to happen. So these are the kind of things that I like emphasizing. The protection that you get is based on the amount of policy, the coverage. If you get a $200,000 policy, well, that's better than zero. But the younger the individual, because I've spoken to some folks, 25, 30-year-old young men. I focus on the guys because sometimes I'm at the gym or at the barbershop, for example. And I like talking about real estate and life insurance. So the young man has his home, has his business, but has no life insurance. And when you're 25, you think you're going to live forever. And I love that feeling. I want to feel that. I really, truly believe you should feel that and think like that. But you should also protect yourself for the unexpected. If you get a policy at 25, 30 years old, is very different than getting it when you're 50 and 60. Is it not?
It is correct, because the younger you take the policy, so the insurance company gives you a longer period at a lower price. So for me, I'm just a few days away from turning 50 years old. So a policy for me at my age is not the same for a guy that is 25 years old. So if you guarantee a price at that moment, you will have a very low price for the next 30 years. If you decided to do a term, even better, you can have a whole life policy when you're going to have cash value into that policy. And at the end of 30, 40 years, it is highly guaranteed that you're going to get more in cash value in that policy that what you pay for the policy, right? And that's the advantage of that. Now, we noticed something about, people say, I have insurance through work, and they call that death insurance. Why do we call it death insurance? Because it's only good when you die, right? Life insurance is
good. It's only good. It's only, pardon to interrupt you. It's only good while they're employed with that employer.
That is correct. And even worse, we've seen cases when people have passed And when they do the claim to the insurance company, they ask the person, "Does your husband die while he was working?" And when they
Wow.
say no, they say, "Well, he is not covered because that insurance policy only covered him through work while he was working," which is even worse. Right now, when the person owns their own policy, they don't have to worry about that. They don't have to worry about, whatever happens, whenever it happens, because they are covered 100% in any place, anywhere they go. And that is great. And we've seen cases, young people. We had a story of, unfortunately, an agent. He was about 21 years old and part of the national agency. And he had a policy. And the story goes that his mom says, "Why are you having a policy? You don't need this policy. You don't need this coverage. You're too young for that. I want you to cancel that policy." And only God knows how things work. And unfortunately, 5 months later, a young guy, his mom went to the room to wake him up. He never wake up. And that was it. He passed on his sleep. And that family, a couple of days later, received a check for $425,000. And the lady was in shock, right? Because her son, didn't cancel the policy. Now, there's no money in the world that will give you a son back. You would pay even double of that if you could get, a love member of your family back. But in that case, if it's something we have no control over, just imagine a gift, the kind of gift of love from a family member
Yeah.
that is giving you, how the life continues, and it continues with less stress because one day you thought about your family. So that's the importance of being protected. And as you mentioned, and we are pushing the envelope, and we continue to say you need to have living benefits. Is extremely important in this day and age with stress, with how things are going out there. You need to have living benefits.
Now, again, going back to the young folks, some of them are even probably single. I had one individual tell me, "Angel, why do you talk to me about this life insurance policy thing? I'm not even married. I don't even have kids." But what I told this person is, there's a pretty good chance that maybe down the road, 5 years from now, you may be married, or you may have a child, or you may be having a child and be married. So if you get the policy now, it carries over. You get today's premium, monthly premium, before you, God forbid, you get diabetes, or you start suffering from high blood pressure, or any other ailment that you may get. Now's the time, if you are healthy and you want a very low premium. I've seen some premiums out there for $35 a month for $500,000 coverage for a young man. So we spend more money doing all kinds of other stuff, drinking coffee on a daily basis, paying $3-5 a day. And we spend so much money, and we think that a monthly premium is going to be a burden, instead of thinking that it's actually going to be that blessing that you'll have, you and your family, when the time comes that you need it. I always say, better to have it and not need it than need it and not have it.
That is correct. And it's funny because sometimes these days you cannot even go to a fast food with your family. When I go with my kids, it's $25, $30 just for one drive-through visit. And some young people out there, for that amount of dollars, $30, $35, less than $50, some people in 20 something dollars, they could get covered. And you'll be surprised, right? We get to see it often because, as I said, we work with a lot of carriers, and some companies, depending on the age of the client, they give better prices because they specialize in certain clients more than others. And we've seen those. And it is interesting to see, people get surprised. Oh my gosh, I thought it was going to be, a little bit more expensive, and it is not. So what I would say to anyone that is listening, if you have a mortgage, if you have kids, if you have people that depend on you, you need to be protected. Now, for people that are older that say, I don't have young kids anymore, well, you need to be prepared because parents don't want to leave trouble in their family. And unfortunately, we've seen, elderly parents, they pass and they didn't make the proper arrangements, right? And then you see that conflict into the family because they say, who's going to pay for the funeral costs, And then they see that one of the siblings is doing better than the other. I say, you're doing better. Why don't you put a little bit more money? Because you have more money. And then that sibling replies, well, I'm equal son as you are. Why do I have to pay more? right? And that creates a strenuous situation that it could be avoided, right, by that. And not, none of that should happen if a person, and we insure people up to 84 years old with what we call final expenses. So that would be, people should be able to mourn the loss of a family properly, right? But when the family is struggling to cover the cost of the burial, you don't even have the opportunity to close that cycle of pain and that loss, because you have to worry about finances. That could be solved, and no family should be doing a car wash out there. No family should be doing a GoFundMe. No family should go through that, especially with the amount of money that we spend on other things that are not in comparison. They're not as important.
Well, I mean, lack of preparedness from your part should not be someone else's burden. So there is an opportunity here for preparation for the unexpected. And if that preparation is not considered or taken care of, and the unexpected happens, then there's turmoil. It's better to make decisions now rather than under stress. And like you've mentioned before on other occasions in our conversations, if you're going to be missed, well, you can be missed emotionally, like you're not there, you pass away, but you shouldn't be missed financially. You should allow your family to continue to live the lifestyle that you've been providing for them. Your kids shouldn't have to be taken out of the school that they are attending and out of the house that they are now living in because of lack of preparedness and for the cost.
That is correct. And we have a saying that, life insurance is not because you're going to die, but because of the people that you love are going to continue to live. And when you have appropriate coverage, and that's why we mentioned that, what we call optimal coverage should be at least 10 times your income, because when we pass, it's not a matter if we're going to pass, it's just a matter of when, right? If something is guaranteed in this country, besides taxes, is that we're going to pass, right? So we better be prepared. And my family, they will miss me. My kids certainly will miss me. Maybe my grandkids by that time, hopefully, I get to see my grandkids, right? But if I'm not present, they're going to miss my physical presence. It's going to be an emotional loss. But financially, they're going to feel my presence for the next 10 years because I prepare for them. And sometimes I heard people, and I would say in an ego kind of way, saying, oh, if I pass, whoever is left, they need to, to take care of their lives. And no, that's not a responsible parent and loving husband, a person that has people under your wing. I think is our responsibility, especially for men. And anybody should have it, but unfortunately, 7 out of 10 marriage, the husband passed first, right? And there's a lot of people that joke about for all the reasons why we men die first, right? But we're not going to go into that. And so it is very important that we are protected, and that's why they say life insurance is for the benefit of the females, because they are the ones that become widows more than men. And that's just the numbers, and we need to plan. If we know the numbers, why not plan accordingly?
And numbers don't lie. I mean, statistically speaking, it's going to happen. And then I'd like to reemphasize that what if you don't pass and you have a terminal illness or chronic or critical? What happens? So keep that in mind. You want to be able to protect yourself if you pass and if you don't pass and you need assistance. So the GoFundMes are great, but family members and friends will probably help a month or two, but they got their own responsibilities as well. So it's incumbent on us to prepare for our family. And that's why it's important. And if anyone has questions revolving around life insurance, please reach out to Jesse James. If you could at least, when you reach out to him, let him know that it was through the Grimaldo Group that you were able to gain interest in a life insurance product. Before we finish, I'd like to kind of ask you to briefly touch on the annuities. I know it's a very complex subject, but a lot of times people don't even know what annuities are. They hear more about 401k, but we have several people out there listening to us that are potentially coming to their retirement age and have a 401k. Can you kind of briefly summarize?
More than happy, more than happy. And what is going on right now in the country? What happens when you are in the retirement age, right? Life, financially speaking, you have two stages. You have accumulation, and you have distribution. Now, accumulation is all the years that you spend working and accumulating and saving in whatever account you decided to save. Some people do in a bank savings account. Some people do in an IRA. Some people do in a 401k. Different accounts. But when it comes time to distribution, which is how I'm going to access that money, there are different strategies. What's the number one concern in retirement is market volatility. When you are in your retirement years, the hard-earned money that you accumulated on your entire life could not be exposed to the market at all. When you're in a retirement age, because we learned from 2001, the market dropped 40%. Then when the market was recovering in 2008, the market dropped again. And look at what's happening right now in 2022. There's turmoil in the market. Now, what annuities do? Life insurance protects families. Annuities protect your retirement. So an annuity is as equal as an insurance contract, just the difference is protect your money. Now, there's three kinds of annuities, right? So it's not that complicated. Some people want to make it complicated because that's how they make their money. But we like to make it easy. There's only three kinds of annuities. Annuity number one is what they call a variable annuity. A variable annuity is an annuity that is attached to the market. That means when the market goes up, it goes up. When the market goes down, your money goes down. And it also carries a little bit of higher fees because it's an active managed account. Now you have fixed annuities. Fixed annuities are annuities that work similar as a CD or a money market when you have a guaranteed interest, right? And most of them goes from 2% to 3%. I've seen 3.5%, something like it. And it depends on how long you're going to have it. You know you're going to get the same interest. And then you have the third option, which is fixed index annuities. Index annuities don't have a guaranteed interest that you're going to earn. It depends on how the market performs. So normally you participate between 65 to 80% of the profits of the market. You don't get all the profits. But on the other side of the coin, when the market turns down, if you get a negative results on the market, the fixed index annuity guarantees that your principal and the interest that you have earned never get lost. So what Warren Buffett said, one single thing. Number one rule of investment, make sure you don't lose a dollar. Rule number two, make sure you never forget rule number one. So never, ever, especially on retirement. And we've seen cases after cases after cases. People that had $1 million in 2001, in 30 days, they went to 600,000.
Yes.
And guess what happened? They never see their money again until 2012. 11 years later, because when they were recovering, in 2008, the market crashed again. It took them 11 years. When you are on retirement, you need to avoid that at all costs because some people will never see their retirement money ever in their life. So last quarter, $64 billion in annuities were purchased. In last quarter alone, that came 4 days ago in the Wall Street Journal. And in the past year, more than $200 billion worth of annuities. Why? Because people are protecting their money. Now, annuities not only protect you against market volatility, right? It protects you against one other thing that is critical in retirement. And that's called sequence of return. Sequence of returns is depending on the age that you retire. If you get a crash on the market once you're starting your retirement in the first couple of years, you're at risk of running out of money 10 years before you die. Now, working hard of your life to run out of money 10 years before you die, that was not a plan, right? No. So that's one of the ways that one of the things that annuities do is they protect your principal, protect your interest, avoid the risk of sequence of return, and also provide you guaranteed income for life. Doesn't matter how old you get, because trust me, you're going to have bills for life, guaranteed bills for life. So you better have a guaranteed income for life. So that's one of the few things that annuities, and there are different offers from different companies. We specialize in that, and we are very happy. We have clients all over the country, right, in more than 16 states and Puerto Rico. And you have my information right there. You have my phone number, my email, and just let me know that you find about us through the Grimaldo Group. We are happily to work hand with hand with the Grimaldo Group. They're fantastic, a group of professionals. What they do for people to help them, get their houses, they do the extra mile, and that's the kind of people that you feel happy to work with, starting from the head of Juan Grimaldo.
Thank you so kindly. And again, today's information is available to you. Reach out to Jesse James. We just touched the surface, so to speak, regarding term life, but there's so many other products we spoke about briefly on annuities. If you want to know more, please feel free to call Jesse, email him, reach out to him, or feel free to call me as well. And we'll get you an appointment set aside so we can focus on having a consultation with you. Thank you, Jesse, for taking time to be with us today.
My pleasure. Thank you, Angel, for the invitation. Thanks to the Grimaldo Group and all the people responsible to make this interview happen.
Thank you, and God bless.
God bless all.